Hello and welcome to this video. I will be walking through Universal Insurance H1 2025 numbers. Universal Insurance is a firm listed on the NGX, that's the Nigerian equities market, and it's an insurance player. Now, before we dive in, thank you to everyone who takes out the time to like, share, subscribe, and thank you to everyone who's actually watching this video right now. So, if you are watching this video now, this video should go up about 6 p.m. West African time. Thank you for doing so. Every like, share, comment is very much appreciated. Please continue to do so. And if you don't do so, as some people may feel, why do people keep saying so? Every time you do so, the more YouTube is likely to recommend this content or move it up in terms of ranking. As always, please note that this isn't financial or trading or personal finance advice. Please do your own research in everything you do. So nothing I say is what you should base your investment decision. In fact, nothing anybody says is what you should base your investment decision on. So let's look at H125 numbers. H125 means the first 6 months of 2025, and that's January, February, March, April, May, June. This firm runs a January to December calendar. So the calendar year starts in January and ends in December. So how are the numbers? The numbers are pretty good. You have insurance revenue up 56.48%. The rise you have is due to higher oil and gas premiums. Insurance service expenses went up. So net, you actually have that insurance service results dipped. In fact, insurance service results before reinsurance contracts dipped 35%. And so, what is reinsurance? Reinsurance, simply put, are firms that insure insurance companies. So there are claims and some expenses that insurance companies pay some form of fees and coverage. And so when those claims happen, they can recover some of that money from their reinsurance firms. So what you have is net insurance service result fell sharply, but that's very likely due to higher claims expenses. How about investment income? Now, investment income, even though it's up, the bulk of the investment income is due to some fair value gains. So essentially, you have an asset that is worth more than what it originally was, and all that. So by law, you have to give the correct valuation of that asset. If you strip that away, you probably have a sharp fall in investment income. So profit for the year up over 100% from 600 million in H124 to 1.3 billion in H125. But if you strip away over 1 billion in gains, actually you have very likely would have a decline year on year in terms of profit. So it's important you note that, and I wish I could go online to scroll through the actual numbers so you see what I'm saying, but I discussed it at some length in the Spotify version. So if you're not following on Spotify, you want to do so, links are in the bio. Now, what are my views on the stock? I mean, I remember I've expressed myself quite candidly in the Spotify episode, and I have my numbers backing me here. Stock is a sell. You might say if profit after tax is up by over 129%, why would you want to sell? And it's quite easy. I don't like the composition of this firm's balance sheet. I think it's overly weighted in real estate. So what do we have? Book value per share is 1 naira and 2 kobo. Current price, that's Friday or Thursday rather, closed yesterday, 1 naira 20 kobos. The stock is trading at price to book value of 1.1 times. So it's not the most pricey of insurance stocks. I mean, I think I was looking at Regency Alliance, that should be trading at probably 1.2. So you have some stocks trading at 1.2 times book value, 1.4 times book value, 1.7 times book value. Book value is simply what you get. As you can see, strip away the liabilities from assets and you have book values. Assets are what the company owns. Liabilities are what the company owes and all that. So if you now take that, you have 16.4 billion in book value divided by the number of shares, and you have your 1 naira and 2 kobo. So from that balance sheet side of things, stock is a sell for me. But if you're looking at assets, return on assets, return on equity, it's not these numbers aren't fantastic. I mean, if you look at what the banks are doing, clearly you have better numbers. Now, return on assets, as I explained, I think in my previous video, yep. Return on assets simply means that for an asset, remember, assets is what a company owns. For how much is in profit is this firm generating for assets it has? And so you have return on assets of 5.31. So in essence, you can say for every 1 naira assets, it's probably generating a return of 5 naira and all that. I mean, it's honestly it's not fantastic. And in fact, the numbers for return on equity is simply essentially the shareholder funds, capital put into a business. So you have what return on equity of 8.3%. It's poor. You are in a country with mid-teens inflation. So if you're doing 8.3%, and even if you want to analyze and say, okay, these numbers are for the first 6 months, let's assume that this company does 2.6 billion in profit for full year, 12 months ending December 2025. You have assets what 25.9 billion in assets. At best, that would be maybe 10% ish or just under 10% return. And then in terms of return on equity, 16 billion in equity, and then you have 2.6 billion in profits. 10% of 16 is 1.6, so probably 20 something. I mean, so okay, fine. You could argue that, yeah, probably full year numbers will be good. But honestly, I mean, and this takes me to the balance sheet. Let's see if I can expand this a bit. Can I? Yeah. So, as you can see, look at the asset side of things 25.9 billion in assets, of which investment property is 7.8 billion, property, plants, and equipment 4.9 billion. So you have about, I mean, of the assets, 25 billion or 26 billion in assets this firm has, half of that is property, plants, and equipment, investment properties. Then what about cash? Cash is what? 2.8 billion cash equivalent. That's like 3 billion. Financial assets, that's like what, 4 billion. So that's 7 billion in cash. I mean, so you can work out the numbers. If you have 7 billion in cash, how much realistically can you earn from that? Maybe if you stretch it a bit, you probably will earn what, a 1 point something billion. So the question is, if I have 26 billion in assets and I'm earning a what, 1 point something billion, I mean, it's poor really. So from a fundamental basis, I think that there are more interesting options in this space. From a technical basis, though, this stock is a trader's delight. I mean, way before all has been the announcement about the president signing the insurance bill, the stock is a trader's delight. It's quite easy. It's extremely liquid. You have decent volumes and all that. So short-term players who want to swing from 90 kobo to 1 naira, 90 kobo to 1 naira 10 kobo and all that. I mean, it depends on the volume you have. Even a 5% gain, if you're dealing in huge volumes, you're maybe a 1M, 10M, 100 million. 5% on the 100 million is what? 5 point something million naira. The charges are probably 0 point something 1%. So you probably can easily make 4% in a week or two, depending at the price at which you get into the stock. So I hope you found this useful. These are my views and the likes. Before you go, you can find more content on the podcast shortly, as soon as you see this or whenever you see this. Very likely the podcast episode on PZ Cousins will be up. And you can also find an article on greenticketales.com on PZ. That's also up as well. So thank you all for joining. If you are in Nigeria, hope you are enjoying the Malud holiday. If you are outside the country, I hope your work day is going well and you're looking forward to the weekend. Thank God it's Friday. See you guys in the next video.